Investors keen on taking up the bond offer will have a choice between the fixed note, whose interest rate is pegged at 12.25%, or the floating rate note set at 185 points above the 182-day Treasury bill, which based on the last published rate would be at 8.175%. The minimum subscription required is 1 million shillings.
Experience in the market so far this year has indicated that we do have appetite for both fixed and floating, depending on the various profiles of the investments that individuals hold.
Seeking to obtain 12 billion shillings through the 5-year bond, Safaricom said the cash raised would go into financing its business growth initiatives. Top on the agenda is expanding its data services offerings, which accounts for only 14% of its total revenue. The firm hopes to increase this to over 20% by next year. The bond will be offered in 3 tranches, Wednesday's 5 billion being the first. Arrangers say the timing of the other 2 tranches will hinge on liquidity levels in the market, demand, and pricing considerations of both investors and the issuer Safaricom.
But the balance sheets of a lot of the banks are weakened because of the global crisis. We are the biggest corporate in Kenya. We found ourselves in a unique position where we weren't sure if we could get that liquidity from those forms of financing.
Safaricom hopes to capitalize on the current positive run in the fixed income securities, where the latest bond offering of 15 billion shillings by Kengen was oversubscribed. The offer closes on the 29th of October, while allocations will be announced a day later. The joint issuers of the note are Barclays and CFC Stanbic Banks.